KCM Trade's global market analyst, Rachael. The Federal Reserve has kept interest rates on hold, maintaining the benchmark rate between 3.50% and 3.75%. But beneath the surface, a major fracture is emerging inside the central bank. Three officials, Cleveland Fed President Beth Hammack, Minneapolis Fed President Neil Kashkari, and Dallas Fed President Lori Logan dissented, voting for an immediate quarter-point rate hike. That marks the highest number of dissents faced by an incoming Fed chair at their second meeting since Arthur Burns back in 1970, underscoring deep internal disagreement over sticky inflation. Chair Kevin Warsh faces a delicate balance. While the US economy continues to expand at a solid pace, backed by strong productivity, stable labor markets, and massive artificial intelligence infrastructure investment growing at nearly 20% a year, inflation remains above the 2% target. Warsh emphasized price stability, yet offered little forward guidance on whether a rate increase will happen at the coming policy meeting. His shift away from detailed guidance is intentionally forcing markets to rely on incoming economic data rather than explicit central bank promises. Meanwhile, inflation risks persist. Energy supply shocks from ongoing Middle East tensions, potential tariffs, and strong semiconductor demand are continuing to keep pressure on prices. Long-term Treasury yields have drifted higher, reflecting broader investor anxiety over persistent inflation, even as shorter-term policy expectations have eased. With 2 rounds of key employment and inflation reports scheduled before the next policy decision, the debate remains wide open. Whether the dissenting hawkish stance gains broader support will depend on whether upcoming data shows inflation easing or supply-side pressures building once again. For investors, the takeaway is clear. Expect heightened volatility as macroeconomic data, energy prices, and Federal Reserve communication continue to drive the market's direction. Well, that's the latest from KCM Trade. Don't forget to subscribe. I'm Rachael, signing off for now.